Good day, everyone, and thank you for joining this June 2026 Finance and Economics Update. I'm Russell Gard, Managing Director at Forward Prosperity. Today, we'll review key financial and economic indicators, including government bonds, stock markets, the Australian dollar, money supply, unemployment, and federal government debt. Starting first with Australian government bonds, the 30-year yield fell 13 basis points to 5.31%. We also saw notable declines in the 3-year and 5-year government bond yields. These movements have caused the yield curve to steepen, particularly at medium and longer term maturities. A steepening curve, like the one we are seeing now, often signals improving economic expectations and the likelihood of future interest rate cuts. Another reason for these lower government bond yields could be due to the fact that in times of economic uncertainty, investors often seek the safety of Australian government bonds, which drives up bond prices and in turn drives bond yields down. Looking now at the yield spread, the 10-year versus 2-year spread widened slightly to 0.32% in May after narrowing in April. This mild widening of the yield spread is a positive sign, pointing to improving medium-term economic expectations and potentially being driven by lower inflation forecasts for the coming months. On our local share market, the ASX 200 closed May at 8,732 points. It closed approximately 5.1% down from its March peak of 9,201, though it recovered from an April low of 8,366. As this chart shows, there certainly still remains volatility in the ASX 200, though we did see some price stabilization towards the end of May. Heading over to the US stock market, the S&P 500 showed some volatility, closing at 8,732 US dollars for the month of May. The S&P 500 followed a comparable pattern to the ASX 200, peaking in March before correcting back down and partially recovering in May. The S&P 500 represents the top 500 companies in the US stock market, which is one of the primary reasons that it's such a great indicator for how the overall companies are performing in the United States. Global volatility really can trigger contagion effects across different stock markets all over the world. Looking now at foreign exchange, the Australian dollar strengthened against the US dollar, closing near 71 cents and 80 pip. This price level represents a solid gain from early year levels around 66 cents. Although there are always a variety of reasons for price fluctuations in foreign exchange, the Australian dollar has historically been supported by commodity prices and Australia's relative levels of economic resilience. Let's move on now to the Reserve Bank of Australia. The RBA's foreign exchange and gold reserves saw a slight decrease in its total value ending the month at 112 billion Australian dollars. The RBA's gold and foreign exchange reserves have certainly fluctuated over the past few months, reaching a high of $118 billion before moderating back down. Both gold and foreign exchange provide a valuable buffer for the Reserve Bank of Australia to manage our domestic economy. Australian total broad money supply. Broad money supply is a measure of all the liquid assets in the Australian economy, and this measurement grew steadily to 3.46 trillion Australian dollars by the end of May 2026. This continued expansion of the money supply reflects ongoing growing liquidity in the economy, supporting both consumption and investment. It is always important to remember that the growing supply of total money in our economy creates for us the ultimate incentive to ensure we make investments and make our money work for us to protect against the damaging and negative effects of inflation. For the month of May, the latest employment data was slightly positive. The unemployment rate fell to 4.4%, with 40,300 new jobs added, bringing the total number of employed people to just over 14,738,000. It is worth noting that the current unemployment rate and labour market remain strong by historical standards and are currently even lower than pre-COVID-19 pandemic levels. Looking now at Australian federal government bond issuance, the month of May saw total bond issuances of $12.45 billion, with a clear standout issuance of 7.6 billion Australian dollars on the 20th of May. Bond issuance increases the total amount of federal government debt and reflects the government's ongoing funding requirements to execute and manage different government operations. The issuance of Australian government bonds is an important function of the Australian federal government because this issuance provides the government with money it needs to run government operations and services. In Australia, the primary agency responsible for issuing Australian government bonds on behalf of the federal government is known as the Australian Office of Financial Management. And finally, total federal government debt increased by 7 billion Australian dollars to reach 971 billion by the end of May 2026. Issuing government bonds is the primary method that the Australian federal government has to borrow money. Every time that government issues and sells a bond to an investor, it is effectively borrowing money from that investor with the promise of paying back the principal borrowed amount plus interest. While federal government debt levels continue to rise here in Australia, government debt remains overall manageable relative to the overall size of the entire Australian economy. In summary, we're seeing resilient labour markets, a stronger Aussie dollar, a growing money supply, and easing pressures with respect to Australian government bond yields. Although challenges such as equity volatility and rising debt do exist, the overall picture is one of stability. At Forward Prosperity, we can help you navigate these conditions and build a strong financial future using our expert services in economics, finance, and mortgage brokerage. To learn more, book a complimentary consultation at www.forwardprosperity.com for a no obligations conversation on how we can support you. Until then, thank you so much for watching this presentation, and we look forward to speaking with you soon.